stocks and individual corporates as well. Jairam Sampath, the director of Kaynes Tech, he's also the CFO there, joins in to discuss their foray into semiconductors and the impact of the electronics import policy. They've also announced the acquisition of a smart meter installation and operations company, Isran Menco, for about 43 odd crore rupees. Thanks a lot for joining in. Always a pleasure speaking with you. So let's go one step at a time on the proposal of Kaynes Semicon Private Limited, where you are likely to invest about 3,300 crores in the semiconductor plant. Just wanted to know, one, what would be the asset turnover? By when does it reach its full revenue potential? And what would be the benefits in terms of regulations coming in from, the cabinet's approval that have come by?
Sure. So thank you for having me on the show. The Kaynes Semicon approval in some sense represents a landmark decision by the government, because we are not one of those big business houses or something. We've kind of been working very hard at developing electronics manufacturing in India. And as part of our strategy to become an integrated manufacturing player, we had embarked on this journey. And I'm happy to tell you this total project's capex is about 3,300 crores. And on the plant and machinery capex, the central government provides us, as per their ISM policy, about 50% capital subsidy. And then state government also provides us about between 20 and 25% capital subsidy. So this basically helps us to overcome the initial, let's say, a stage of manufacturing implementation, and we are forced to implement some legacy technology which may not be in the initial stages very profitable. So what it does to us is essentially, in terms of timeline you asked, so we are looking at next, let's say, FY26 as the year in which we'll start commercial production. We'll, of course, early in FY26, we'll start our proof of concept line and working with customers and getting it approved and so on and so forth. This is also the time required to work with all our collaborators and getting our manpower trained, recruited, etc., etc. And in this business, see, typically, if you go by the experience of the existing players globally, anywhere between 1 to 1.5 times, let's say, gross assets turns are possible. Now, it depends it depends very much on what kind of work we do. So if you continue to do low value-added work, then it will be closer to 1. If you do high value-added work, 1.5. We've attempted to kind of tune our capex more towards the advanced packaging areas, which is also the emerging area. And we wish to work in tune with the latest generation of packaging technologies. Of course, the capex permitting, of course. And so almost 3/4 of our capex we are aiming towards the advanced packaging area, where we work with, let's say, cutting-edge technologies and also in the advanced packaging.
All right. Hi, Mr. Sampath. Good morning and good to see you, Ben. So just to revise, the total investment that you will be making is around 800 crores. The revenue potential could be roughly around 4,000 crores odd. And as you said earlier as well, it will be margin accretive whenever this gets up and going. Yeah, and most of the capex will go towards the advanced side of things. Are we getting that correct with regard to this facility itself?
Absolutely.
Got it. All right. Now let's focus on the small inorganic growth that you've done, Mr. Sampath. What exactly, does the company do? If you could tell us in the smart meter value chain, will it be in the PCB assembly? Will it be in the grid? Will it be in the, display designing or in the software development? So could you tell us where this particular acquired company comes in the value chain?
Absolutely. So we are a company which manufactures devices, and we are into some portion of our business into solutions and so on. This particular company is in the area of providing total solutions for smart meter implementation, okay? And they work with several other agencies to make sure that smart meter implementation is enabled. And they have proprietary technology. They have also technology which help in software management and so on. So this particular company actually is a device company with an added strength in software, which is like the head-end systems and meter data management systems. So why is it? How is it critical to us? Because it ensures that we secure our orders in the field. This company has been working with many AMISPs and all the other agencies to secure orders out of the new program that government has brought for implementation of smart meters.
Right.
So this means that we secure our business in this area and also take advantage of the solutions capability here.
Got it. Mr. Sampath, quick couple of questions. Last year, I think this acquired unit did around 65 crores of revenues. So how do you see the revenue scaling up, this acquired unit? And what is the margin profile?
Yeah. So, of course, I'm not at liberty to discuss too many things, which is not in public domain, but suffice it to say that they have secured an order of close to about 3.5 million already. And maybe out of the remaining portion, which is the MISPs deal with, maybe about 20% or something we are expecting as a share of our business. So it's a fairly lucrative business. In terms of margins, all I can say is that it will definitely be margin accretive to our current situation. And being a solutions portfolio, there's a possibility of future revenues too by through AMCs of software and so on without too much of cost being incurred. Plus also supply this software to other device manufacturers.
All right, we understand that you are not at liberty to give us a lot of numbers, but we will push you once again, perhaps when you come after your second quarter results. Thanks a lot, Mr. Sampath, for joining in and giving us the outlook on this acquisition, your semiconductor foray. We'll talk about the order book, order inflows, as well as margins for the entire company when we are, speaking to you post your second quarter numbers. We elicit a promise from you to join us when that happens. Take a short break now, come back, get you more on the markets. In fact, we'll get chatting with Manan Shah, who's the Managing Director of Man Infra.